Hello everyone, welcome to this video. In this video, I'd like to talk to you about what has been going on with the Dow Jones Index. And so you might say, why? Hey, what's going on? Well, it's not per se that has lost a lot of value or so. The interesting thing here is that two massive companies, one being Pfizer and the other one being ExxonMobil, have been kicked out of the Dow Jones Index, and in return, two smaller or at least less known companies have come in return, one being Amgen and the other one being Salesforce. And that's what we're going to talk about in this video. So what has been going on, what is the Dow Jones Index, and why have Pfizer and ExxonMobil been kicked out, and why have Amgen and Salesforce come for these companies in return. And especially the concept of scaling is going to be very important here. I'll be talking about that in the remainder of this video. So let's first start with Dow Jones. So the Dow Jones Index is a very interesting index. It's similar in terms of being an index like the S&P 500 and NASDAQ, but it's very different also because the inclusion criteria are quite vague. So you have a committee for the Dow Jones, where the committee decides on which companies are going to be in the index and which are not going to be in there. And this is quite subjective, and it's very difficult to understand actually why these people in the committee decide how they do. Sure, good performance is one criteria, and you see that all of the companies in the index are actually large and influential companies, but they're by no means the largest in terms of market cap or in terms of profitability. Facebook is, for example, not in it, which is strange, right? And you see that even in this time where ExxonMobil and Pfizer are being kicked out, Facebook has not been included in this index in return. And this leads, of course, to major question marks. So why is this the case, right? The other thing that's important to know about the Dow Jones is that it is price weighted. So the important thing here is the stock price, and your stock price determines how influential you are within this index. And in this regard, Apple's stock split has been very important. So Apple is part of the Dow Jones Index, and Apple, because it has gained so much value over the past years, and because its stock price, of course, also increased year after year, it gained a lot of influence within the Dow Jones. Of course, the Dow Jones also made sure that it adjusted for this price increase. But still, now that Apple is going for a stock split, suddenly its weight within the Dow Jones is going to decrease, right? And this opens the room for having, for example, other tech companies. And this is going to be very important for ExxonMobil, and I'll be coming back to this in a second. But don't forget the Apple stock split. The stock split reduced technology companies' influence within the Dow Jones, and this opened up room for a new tech player to come in. Before we get there, let's talk a bit about Pfizer. So Pfizer is one of the most influential pharma companies in the US. It is strange that they are kicked out, and I think that this has been mainly the case because of the way in which the Dow Jones works, which is, of course, price. So Pfizer's stock price is less than Amgen's stock price. So Amgen coming instead of Pfizer is going to give pharma a bigger weight within the Dow Jones. And I think this is something that the committee wanted to achieve. Pfizer's market cap is bigger than Amgen's, but Amgen's stock price is higher. And because the way in which Dow Jones works, which is based on the stock price, you see that Amgen is being favored over Pfizer to give pharma a bigger room within the Dow Jones, because the Dow Jones does not work in such a way that you can just extend the amount of companies within. That's a big decision to make. They're fixated on 30 companies. So if you want to increase the room of pharma, either you have to kick out a different company and bring a pharma company instead, or you kick out one pharma company for another, but then the one that comes instead is going to have a higher stock price, and this is going to lead to a bigger influence for pharma companies. And this is what has been going on around Pfizer. So nothing really substantial, more about how the Dow Jones works. More importantly and more interestingly, however, is what's going on with ExxonMobil. So ExxonMobil as a company, it is one of the living legends, if you wish, in the US economy. One of the biggest businesses, it has been around for such a long time, so influential. But now it being kicked out of the Dow Jones seems like a validation of the fact that the end of an important era is coming. So ExxonMobil has made some wrong investments, wrong decisions. It bet on gas at the wrong point in time. So only when the top basically of the market of the industry came, ExxonMobil bet on it, and now while it is in decline, of course ExxonMobil is stuck with those investments. On top of this, ExxonMobil has been quite late in the shale gas game, and now what we are seeing with shale gas and shale oil game, and now what we're seeing with gas and oil prices decreasing globally because of a decrease in demand, partly because of the trade war, but partly also because of the pandemic. We see that ExxonMobil is really hurt also in this area. Two important investments are really not paying off, and this has led actually to ExxonMobil becoming loss-making for the first time in so many years. And you see that the company that comes instead of ExxonMobil is actually perhaps a signal, perhaps a message that the Dow Jones is trying to make, because ExxonMobil is being kicked out and Salesforce comes instead. And Salesforce is a tech company, okay? So it's a company focused on customer service, marketing automation, analytics, application development. So in generally, it's a tech company. And if you're nowadays looking at which companies are the biggest around the world in terms of their valuation, aside from Aramco from Saudi Arabia, we see that it is mainly dominated by tech companies. And that is something massive. And the important reason behind this is scaling. So Aramco is big because it's from Saudi Arabia and because it has the right to exploit, of course, all of Saudi Arabia's oil fields, gas fields, right? It is not per se because it is growing internationally. But if you look at why tech companies are big, it's because they are easily able to scale, which means that they are easily able to grow fastly, much faster than the cost of investment. And for oil and gas companies or energy companies in general, this is not really the case. So think about it. If you are ExxonMobil and if you want to grow, then this is very difficult. You need to have a new oil pit, a new gas pit. You need to perhaps agree with governments. It's very difficult for you to expand your horizon internationally. But if you look at tech companies, through their app stores, through their operating systems, through small updates, server extensions, and so on, they're able to grow so much faster, so much easily with so much less incremental investments. Like back in the days, you need to have had a lot of upfront investments for you to be able to exist as a tech company, because oftentimes you would get to the limits of your servers and you need to install new servers and so on. But nowadays, because of Amazon's web services, because of Microsoft's Azure, because of Google's cloud systems, you can make use of the servers of these giants as other tech companies. Netflix is one of those, for example. And this way, through cloud computing, actually, there's not that many tech bottlenecks that prevent you from a company to scale, because you can use others' resources as well. So the ability of tech companies to scale compared to the inability of energy companies to scale has made that nowadays tech companies are heading for the crown in all sorts of areas, profitability, market cap, and so on, whereas energy companies are having increasingly difficult times because either they're stuck with fossil fuels and the demand for those are, for example, decreasing compared to more sustainable alternatives, but it's difficult for them to switch. Or more importantly so, it's very difficult to scale in a world where we're increasingly less become globalized and where we're increasingly more become fragmented and become more inward looking, and where investments require a lot of time, commitment, and with that a lot of headaches. Scaling is by no means limited to just tech companies. For example, McDonald's, Starbucks have shown that if you have a model that has a lot of standardization and a model that might suit and fit to, let's say, all sorts of people from around the world, that this will also help you actually to scale and grow fast. And these companies have shown that, for example, the franchising model can help with this. Again, energy companies don't have that choice. They need to make those investments through exploit other oil and gas fields, and this is taking time, as said, approximately 7 years, before you're able to get your income, and at the same time, governments and so on have to trust you. So very difficult times for energy companies, especially also with the transition to more sustainable sources of fuel. I hope you enjoyed the video, and if so, please don't forget to hit the like and the subscribe buttons. I wish you all the best in the world. Take care, and hope to see you again in future videos. Bye bye.